Okay. All right. Good morning, everyone. Thank you so much for being here. Your breakfast looks great. I hope you're enjoying it so far, and we're hoping that you are going to continue eating as this program goes on. And I want to say thank you to everybody who is here in the audience in Washington and also those watching virtually with us, because this is our Bloomberg Live event, and we are grateful to have everybody tuning in. My name is Jennifer Zabasaja. I'm a correspondent with Bloomberg, and I'm technically based in New York, but I think my friends and family would tell you, and maybe my expenses here would tell you, that I've been spending most of my time outside of the US and spending a lot of time actually in sub-Saharan Africa, covering a lot of the topics that we are here in Washington to be talking about, which is Africa's growth potential. So this is very close to me and something I'm very passionate about. And this specific event is really important for us, just given our reach within Bloomberg and also what we are hoping to see over the next few years. And specifically when we talk about the growth potential of Africa, the human capital that is there, and also the natural resources, how do we leverage that in order to see the most amount of growth? And I believe that's why you all are here, and that's why we have a really great partnership with the Namibian government helping us have this conversation today. So those are some of the topics that we're going to be getting into today. I'm really looking forward to our conversations that we're going to have addressing some of these specific points. And before we get to them, I wanted to just do a little bit of housekeeping, because we want to make sure that whether you're here with us in person or you're watching virtually, you have the most seamless experience. And so for our virtual attendees, we want to say if you experience any issues with audio or video quality, try to refresh your browser to start with. And if that doesn't work, there is a chat box in the corner of your screen to get some support. And we've also partnered with Worldly, an audio to text platform, transcribing this discussion in real time, making this event more accessible. You can access Worldly via the link in the session description. And we also really want to hear from everybody, again, whether you're here in person or you're watching us virtually on social media. You can engage with us at the hashtag Sustainable Africa and Invest Namibia. And then just finally, I mentioned this briefly, but I want to acknowledge our sponsor today, the Namibian Investment Promotion and Development Board, for making this event possible and for having us here today. And so with that, I want to introduce the Honorable Tom Alwindo. He is the Minister of Mines and Energy for the Republic of Namibia. He's going to give us a few remarks before we get this day started. Thanks.
Thanks, Jennifer. I don't know, do you want me to stand or do you want me to sit? And everybody's eating except me. I haven't, but I guess we're talking about sustainability today, and therefore there's no need to eat. So thank you. But let me really just thank the organizer of the event to talk about sustainability and to talk about innovation, investment on the African continent. This is a very important, I think, discussion I think we're having, and I'm glad to have some, potential investors, American investors on the African continent. And we would also want to hear your views, but obviously here we want to tell you what we think we need to have you doing with us. And I have heard Jennifer in her introduction talking about the partnership. And really, it has to be a partnership. Any investment that is going to really be a successful investment needs to be a partnership. And when you hear about sustainability, most of the time when you hear about that sustainability, immediately we think about climate change, the impact of climate change. And that is true, because that is really something that we all have to be concerned about. But for me, sustainability also has got some other aspects. When it comes to investment, what about sustainability in terms of how do we grow the African economies? What about sustainability with regard to how do we end poverty on the African continent? Africa is still one of the poorest continents. Africa is, again, also one of the continents that people now say is mostly afflicted by the climate change, which is true. But it does not only end with climate change. And we really want to show that we do have a partnership. Let's talk about Namibia. For those of you who do not know about Namibia, Namibia is, of course, in southern African country. Let me just check with the American audience here. How many people know where Namibia is? Just by show of hand. All right, everybody knows where Namibia is, so I don't have to explain much about where Namibia is. It's really one of the most stable countries in terms of investment. We want to look at ourselves to say, like, we might be small in terms of economic size, but we're certainly one of the most environment where I think investment can really take place. Now, as a Minister of Mines and Energy, I would probably want to concentrate my remarks on minerals and also on the energy space. Africa, and Namibia is no exception, have most of the minerals that are used in most of the things we use on our daily lives. You can talk about, for example, in Namibia, we have got, we mine gold, we mine diamonds, we mine uranium, we mine copper. And those are the goods, the minerals that I know most of us actually use in our daily lives. Except maybe diamonds. We don't really use diamond everywhere, but I'm sure there are people who actually wear diamond rings, so that's still an important minerals. But when you think about it, and in terms of what I've heard Jennifer was saying about partnership, when you think about it, Africa being the continent that produces most of all these minerals, that mine all these minerals, most of the goods that are actually produced using these minerals are not made on the continent, are not made in Namibia, are made somewhere else. Then you have to start wondering about the partnership we're talking about when we talk about investment. Is that really a good partnership that we have? We would like to have investors to come on the African continent. But I think there is something wrong. There has been something wrong that we need to start to correct when we talk about partnership. It cannot be correct to say, with all this wealth, with all these minerals that Africa has got, Africa is still one of the poorest continents that we have. So that tells you something, that this partnership needs to be recalibrated, such then that the investment we attract is really investment that should result in a win-win situation, in an outcome that actually benefits both the investors and the host countries where you are investing. And that's the kind of investment we would like to have, want to encourage. And that makes only sense, really, to say, as an investor, you also hopefully want to invest in a dynamic countries, but that can also only happen when actually the livelihood in those countries where you are investing also start actually increasing. So that's very important. Therefore, we need to really rethink our partnership in terms of how we invest. The investors will want to always to tell us, to say, yes, we need to have an investment environment that actually can sustain our investment, which is true. We need to have that. I mean, there's nobody who wants to invest in a country that is going to be disruptive, in a country where you are going to have your investment be nationalized, or in a country where the rules of law does not apply. Nobody wants to invest in that kind of environment. But we would also expect from the investor to say, yes, what we bring on the table is an investment that's also going to be beneficial for you. Like, for example, I talk about extractive minerals. It should also then to say, we are going to go not only get the minerals out, but we're also going to find investment in manufacturing products that use those minerals. So that's really what we're looking for. On the energy, for example, Namibia is a country where we still import most of our energy from the neighboring countries. And as a continent, Africa is more really struggling with energy poverty, where most countries do not have energy. There is statistic that suggests that, for example, the whole of sub-Saharan Africa use the same amount of electricity that the state of Alabama in the US is using. Just one state, and Alabama is probably one of the smallest states in the US. But that's really what sub-Saharan Africa energy is to equate that. And that can tell you then simply that this is really, really a challenge. And therefore, energy has become one of the most important things that we are talking about. And because without energy, you cannot industrialize. You need to have energy. Now, when it comes to energy, you also now have to deal with the issue of climate change, as I was talking earlier on. Africa has got a lot of hydrocarbons, fossil fuels. In Namibia, we just recently discovered oil and gas. And it so happened that we have made a discovery at a time when the discussion around climate change has increased. It's really like everybody talk about that, you know. If you were at COP26 in Glasgow last year, for example, I have heard discussion where one of the big global banks says, we're not going to invest in fossil fuel anymore. We need to stop investing in fossil fuel. Now, in order to address climate change. And those who are promoting to say we need to stop doing this, they even make the case to say, especially Africa need to stop it because Africa is even the most continent that's actually affected by climate change, which is true. I mean, we have seen drought, we have seen floods, so it's true. But I don't think that's a good reason to say then Africa must then stop doing this because, number one, Africa contributes less than 3% to climate change. And even if we were to develop all our fossil fuel, we still contribute less than 4% to the impact of climate change. And therefore, it cannot be correct to say if we were to stop developing our hydrocarbon, suddenly climate change is going to be addressed. Definitely not. It won't. It's really a really minuscule, maybe at all, if you see any impact. So the fact that Africa is impacted mostly by the climate change cannot be the reason to be used against us to actually harvest some of the natural resources that we have got. As I said, we are more concerned about the energy poverty on the continent, how we need to improve the livelihood of the African people, and some of these resources can actually really help us to do that. Bearing in mind, obviously, that yes, there is a transition, but that transition should really be based on the need that we have as African people. And for those who are pushing us to say we need to stop now and we need to reach net zero right now, we really want to think that's really just being a bad Samaritan. I mean, you want to tell us to stop to do things that have actually helped you to develop. And our stance when it comes to this, we believe that fossil fuel is still going to be here, especially gas. It's really something that can be used for the transition. And when we then also when that helps us also then to actually address the energy poverty on the continent, I think Africa then will be in a much better position to embrace renewable energy. And we still want to say those who will really want to invest with us in terms of investing in fossil fuel, hydrocarbons, resources, we as a continent, we as Namibia, we are still open for that investment because we do not see any contradiction whatsoever. Because really our immediate need is really to improve the livelihood of the African people. And we can also do that much more and much more quicker if we are also then allowed to harvest all our natural resources that we have got. But in Namibia, we're also in a very good position because of the natural resources that we have got in terms of renewable resources like solar and energy. Since last year, we have been promoting a very big project where we want to build a green hydrogen project. that not only is going to be used to decarbonize our own industry, the regional industry, but also we are going to produce enough hydrogen and ammonia that can be exported to outside of the continent. And that in itself is also going then to help. Namibia will then be in a position also then to help the globe to decarbonize. So if you think about it, Africa might still actually be the continent that's going to reach net zero much quicker than others. For example, the DRC with the forests that they have got, that capture actually dioxide, and therefore I think it's a continent. Africa might actually be the continent that's going to to reach net zero much faster. But as Namibia, we are pushing both renewables and also fossil fuel, and there's no contradiction because we still believe that hydrocarbon is a transition that needs to be a just transition in such a way that nobody should be pushed to follow an agenda that does not actually take into account their own specific needs, because we do have our specific needs. And again, I just want to say we welcome those who want to invest with us in both renewable energy and also in fossil fuel, because we all welcome. There's no contradiction whatsoever. And again, as I said, the partnership really is a really good thing. It's a good way to use, but the partnership, again, I just want to make that point that we need to look at that partnership. Is it really a partnership? Because when in a partnership, it's like, both feel like they actually got, something to gain from this partnership. And I think if you look at, historically what has happened now, we're talking about innovation, talking about investment, we're talking about global trade. All those things have been happening all along. There have always been investment on the African continent. There always been, innovation in that investment. There has always been a global trading, through the WTO, for example. But yet, if you look at really what has that meant for the continent over the years, you can see there's something wrong. There's something wrong, and therefore that's what we together, as our partners, we need to really interrogate that question. And when we sit around the table negotiating deals, we need to ask ourselves, what will that mean for the African people? What will that mean for the host countries? And I think if we go that way, certainly we're going to really have a good partnership. And I look forward to see some of you in Namibia. I see my sister told here from ExxonMobil. ExxonMobil is one of the companies that investing in Namibia. So I look forward to you discovering oil and gas again soon. So yeah. So with that, thank you very much, and I welcome all of you. So thank you very much, Nangula, for organizing this event. Thank you.
Good morning, and thank you so much for joining us here today. My name is Anna Montero. I'm an editor at Bloomberg News on the economics desk here in Washington. For our session on industry and how it can unleash African innovation, we're joined by three professionals who, together with their companies, are doing cutting-edge work in the areas of energy and food production. We have Mike Rosenberg, who is the co-founder and CEO of Circadian Technology. Thank you, Mike. We also have Bill Salas, who is the co-founder and chief strategy officer of Regrow Ag. And finally, we've got Rich Voorburg, who is the North America region president for Siemens Energy. Thank you so much. It's very timely that this panel follows on from opening comments by Energy and Mines Minister Tom Awendo from Namibia. Namibia is set to be the first a carbon-neutral country in Africa thanks to investments in green hydrogen production. Richard, I'd like to start with you. Siemens Energy is involved in many hydrogen projects worldwide. We've got the US, Germany, Argentina, just some of the few. We know that Namibia and neighboring South Africa have big plans on this front, and I'd like to explore this more with you. Many African countries seem like ideal candidates for the rollout of such clean energy. In which nations do you see opportunities for this energy generation technology, and what makes these countries good contenders?
So, I think the opportunity is all over. So, and I think part of the problem that we have over here is we look at Africa and say, what's Africa? Well, it's not Africa, it's individual countries. And each country is a little bit different, and we've got to make sure that we're looking at them. So when you look at the coast and you see a lot of wind opportunities, maybe in the center you see more solar, and then all those, so when you create the renewable energy, then you can take that renewable energy and turn it into hydrogen. And you not only just hydrogen, you turn it into green hydrogen, which is the way that we want to go. So we're open for all areas, and I think renewables can be reached, as well as natural gas, through a lot of Africa, and that can be eventually turned into hydrogen. And once you're into hydrogen, you've got so many more opportunities, whether you're using it for solar, for ammonia purposes, e-gasoline, e-methanol. There's so much opportunity once you get it into the base hydrogen side.
Absolutely. Hydrogen is just one of these renewable options. We know many African nations are taking advantage of technologies to harness wind and solar for power generation. How does a country choose which one to go for?
I'm a big believer in all the above. Don't bet on one area, because if you bet on one area, you put all your eggs in that one basket. So if you're looking at all these different areas and looking at all the opportunities, some are going to be winners and some are going to be losers. But you've got to be in all the above. Otherwise, you've limited your choices going forward.
Mm-hmm. I'd like to extend the conversation now to Mike. Mike, you've got very deep experience in helping companies in Africa deploy renewable energy. I'd like to ask you, what policies do African nations need to develop to attract this innovation technology? What hindrances need to be removed?
Yeah, thanks very much. So, we're looking at a landscape globally where energy is decarbonizing and decentralizing. Finally, with renewables, you can produce power where it's consumed, and this trend can happen fastest in Africa because of distributed populations, because of distributed industry. And I think we need to move this debate from SDG 7, affordable and clean energy, and really look at this as boosting productivity, accelerating growth, SDG 8, decent work and economic growth. And so where we focus is in this commercial and industrial space, and how can decentralized hybrid power, wind, solar, storage, hydrogen empower these businesses, which will create the jobs and economic growth and stability in so many African countries. And I think the policies that need to be looked at are how can we solve issues on the supply chain, so reducing duties. Nigeria is 20% on energy storage, for instance. How can we incentivize more young people to upskill into electricians, into solar developers? This is capacity building, and that can be very collaborative. It's an area we work in. And if we can solve that, and if we can bring more finance into this space, because diesel is cheap up front, expensive long term, and fuel prices are up 100%, whereas renewable energy is always this upfront investment. And so far we've seen some really exciting developments, Exim Bank, for instance, with utility scale projects, but how can we get low cost Western finance into this commercial industrial space?
Mm-hmm. Yeah. You talk about decentralization, and Siemens, you need a grid to do your work. In places with established distribution grids like in South Africa, connecting these new projects to existing power distribution infrastructure has proven difficult because the existing grid isn't necessarily able to accommodate this. So there's this inability to harness the benefits of the green transition in some places. What policies do you see as being necessary to facilitate this?
So when you hit the nail on the head, because everybody likes to talk about generation. Generation is the new sexy side of the business, but everything needs to be connected from one generation source to where it's being needed. So the policies that we needed are, first of all, permitting, to make sure that as you move across countries, in boundary layers and different from one state to the next, that the permitting gets opened up. Mm-hmm. And we see that not only just in Africa, we see it extensively in North America as well. And people can't go ahead without projects because of permitting. Mm-hmm. So that becomes probably one of the major boundaries. But also, people don't really like to talk about transmission, that infrastructure. Infrastructure is a problem globally. and we've got to make sure that we're focusing on that. Otherwise, we're going to end up with really good renewable resources that can't connect to the market, and that's a dangerous place to be.
William, Regrow Ag has developed software that helps food producers, General Mills, Cargill, among some of them, to reduce their carbon footprints with software and soil crop modeling. There are many examples of successful agricultural enterprise throughout the continent, cocoa in West Africa, tea in the East, but there's no doubt that there's room for a lot more. With 60% of the world's arable land in Africa, in some instances, it could perhaps be done more sustainably, keeping the quality of soil, for example, in mind as well. What else does the continent need to do to unlock the vast potential that it has in an ecologically responsible way?
Yeah, thank you. I think the key issue is to recognize the variability in agricultural production systems across the continent. The differences in the climate regimes, soils will dictate different opportunities for improving resilience of these production systems and potentially creating climate benefits. So agriculture is at the center target of climate change, right? Resilience is something that we need to build. In Africa, roughly 60% of the lands are degraded. So there are opportunities to use scientific innovations and data innovations to connect outcomes for adaptation, reversal of degradation, and by sequestering carbon, improving nutrient cycling, that actually can be funded through blended finance, both public sector finance, but also corporates that are making their science-based targets that interact with the supply chain in Africa. So I think we really need to recognize that agriculture is heterogeneous and that the interventions to create these outcomes need to be specific to a locale, to the technical assistance that's required to help farmers make that journey into a more regenerative production system, and to create financial incentives to connect those outcomes with the supply chain, because that's where the finance will come from, both through public but also private sector finance. We're seeing strong interest from global corporate commitments for their science-based targets to help incentivize this transition. And the co-benefits that come with it: improves soil health, soil carbon, reduces risk of yield losses, and creates a more resilient economy for farmers and globally as well.
Okay. Bill and also Mike, both of you have touched on this financing. Financing is key. How are things evolving? Are you seeing more of a take-up in interest in developing projects on the continent?
Yeah, absolutely. So, Washington, D.C. is home to a major energy service company, which is financing C&I assets. With telecom towers, where you have very bankable counterparties, and yet, requirements for off-grid infrastructure, we've seen a lot of activity. But I think, to really look at economic empowerment, to go beyond, enabling connectivity, everyone talks about local banks, high interest rates. I think that we need to look at how digitalization, how real data of these sites and payment ratios and so on can drive greater institutional interest. So we don't just have a few fragmented startups, funding these independent C&I projects, whether it's mines or factories or agro-processors, but large funds and DFIs coming into this. And perhaps, as has happened with energy access products, offering subsidies.
Okay. Would you like to talk about that as well?
Yeah, I think on the ag side, I think there's a rethinking of international development programs and pivoting away from what is often thought of as a push mechanism where you bring in resources to do X, Y, or Z. I think in ag, given the heterogeneity of the landscape and local knowledge, that really needs to think about more incentive-based programs that reward the outcomes, which is what the incentives are for, and takes advantage of innovation at the local level where agriculture matters. So I think in terms of the public finance, that's a new mechanism that I think will create innovation that's applicable to different agricultural landscapes. I also think on the corporate side, the private side, we need to be able to connect the outcomes with the assets that are generated to mobilize investment from the private sector. And I think advancements in technologies, remote sensing technologies, data science technologies, blockchain can begin to get over that barrier, which is connecting the farmers and their farmers' outcomes to the end users along that value chain. And I think that will unlock significant private finance once we figure out how to get over that barrier.
How can governments facilitate this?
I think technical assistance, helping with co-finance in terms of changing these systems. It's difficult to change agricultural systems that have been in place for long periods of time, and there's technical assistance that needs to be there. There needs to be some sort of risk management. We're asking growers to adjust their practices, and sometimes the yield resilience and economic benefits take some time to actually manifest themselves because of the processes when going from a very degraded system to a more healthy soil system takes time. And so that has to be de-risked through both public and private finance, I think.
And I have the same question for you, Mike, on the energy side. Government involvement, how can they help facilitate this?
So if you look at energy access, whether through solar home systems or mini grids, all these rural electrification agencies, other government ministries would manage these World Bank budgets for subsidies. And a lot of this is demand driven. So I think if you move this conversation from sort of rural energy access to economic growth and to business empowerment, the main cost base for most commercial industrial is electricity. They can reduce that cost base if they can move away from diesel to renewable energy. Then I think it's about instigating this conversation with organizations like World Bank and developing subsidies for, as has happened in the West, of course, for deployment of renewable energy, or subsidies for financing this, really kickstart this interest in the commercial space. There has been a lot of renewed recent interest in carbon credits, and it's worth noting that the CO2 displacement is very real here. You're not displacing hydro usually. You're displacing very dirty diesel from inefficient generators. And I think if that can be incorporated into some of these government policies, perhaps that carbon credits are required to claim subsidies, then that could spur a greater investment.
And what about the international financial institutions and the role that they're playing? How can that improve?
I think there's a lot of enthusiasm for this, and whether it's World Bank, IFC. I mean, I was at Exim yesterday, and there's so much interest in American technology and American capacity, helping with this energy transition. But also, there needs to be this clear demand from African governments and ministers that this is what we want to tackle, and this is how we want to shape that fund or that policy.
How can, excuse me.
Well, I mean, we're at the core of this U.S.-Africa Leader Summit, so hopefully there'll be lots of conversations happening around this. But I think it would be productive if there's a focus on what businesses need in terms of power support, as opposed in addition to households and rural communities.
Just given the low percentage of Africa's R&D funding, how can international companies help support the continent? I'd like to start with you, please, Rich.
Yeah, and at Siemens Energy, we say we can't do it alone. We wish we could do it alone, but we can't. So it's about partnerships, and it's real partnerships. It's not a one-sided, lopsided partnership. So I think when I look at what we do with some of our academia, just last week we signed an agreement with Georgia Tech. And those are the type of things that, with companies tying with governments, tying with academia, and then academia tying with other academia. So, African colleges tying up with the U.S. colleges, bringing that together, building on each other, not saying, oh, we're going to go in competition with each other. Now it's about collaboration. It's about building on top of each other. And we've got to get away from this, this competition of, I'm going to write a better paper than you, I'm going to make more money than you. We're here for a bigger purpose, and we've got to stand on each other's shoulders, and that's the way we get to the right place.
The same question for you, please, Bill. With R&D, how can this be improved?
I think from the ag sector perspective, there's ongoing innovation to really think about what are the appropriate varieties or cultivars for a given crop in a given locale. Understanding how the genotype of different varieties influence the outcomes based on the environmental conditions and the management practices. So this concept of G by E by M, which is bringing together the seed producers that breed for certain genotype characteristics of the varieties that are applicable to the different geographies across the broad landscape in Africa. That science is starting to come together, but it's also merging with the understanding of the geospatial nature of environmental drivers that influence productivity, yield loss, pest management risks. That needs to be taken into account. Again, bringing together maybe public sector geospatial data from space agencies like NASA, ESA, and private sector space agencies that can really help understand the variability across Africa. And then lastly, and this is where the technical assistance piece comes in, is the management lever, right? So you have a good seed stock that's appropriate for a particular crop in a particular locale. You know the environmental risk from it. You need to also de-risk it through appropriate management interventions. So there's partnerships along that whole supply chain from the seed providers, input providers, technical assistance providers in a locale. Need to bring all that information together to sort of de-risk yield impacts of climate change.
Absolutely. And the same question for you, Mike, on R&D. How can international companies help support this? What can we do to incentivize that?
Yeah, so if you look at this rich ecosystem of ambitious startups in Nairobi, in Lagos, across all sectors from fintech to, transforming so many industries, I'm not sure there is a strong foreign company requirement. I mean, in our space in the energy transition, it would be great to have more capacity building, so that Nigerian students, for instance, aren't brain drained and aren't applying for student visas, and that some of this, core electrical engineering could be distributed, this knowledge. But I think, actually, maybe the best way to spur innovation is for foreign companies to hire more of these developers or to use these startup products. I mean, we're recruiting in Ghana, Kenya, and Nigeria, and the talent pool is phenomenal. And so these, self-taught. It's not as formalized education system generally. But in digitalization, in software and electronics, I think perhaps foreign companies should look at more what they can learn from these great engineers rather than what they can bring.
Exactly.
And if I may just sort of jump on that, I love your comment about startups, because as a larger company, we sort of look at startups and we kind of look down our noses at startups. And we've got to take a bit of humble pie and go, man, those startups can bring so much to the party. And there's things that we as a larger company can bring to the party as well. And if we really have that humbleness and respect, we can really take this to the next level. And we partner through Breakthrough Energy with a lot of startups. And that's exciting to see what they bring. And we bring an ability and a knowledge on how to scale their product. We also bring the knowledge of what the industry have and who the customers are. And they bring that great entrepreneurial spirit that we've kind of lost over the years. So really working in that partnership. And you bring in the universities, because the universities really have the great view to who the great startups are as well. And we've seen a lot of successes, and we need to drive more and more of that as an industry.
Absolutely. I think that's a lovely note on which we can end this panel. Thank you so much for your participation. I'd like to thank our panelists for their insights. I'm going to hand you over now to Jen, who will host our next discussion on advancing sustainable economic growth. Thank you all. Thank you. Thanks.
Wonderful. How is everybody doing? Good. We're going to get started with our next session now, and I'm going to be joined by two really wonderful panelists. We have Eyong Ibe. He is the Executive Director and General Manager at GE Healthcare for Sub-Saharan Africa, Europe, and the Middle East and Africa, or Middle East. And also Teresa Hudson, who is the Corporate Vice President for Tech and Corporate Responsibility for Microsoft. Here to talk about inclusive, sustainable economic growth, and when we talk about it through the lens of the continent of Africa. Let's just start here because we were talking a little bit, and I think the through line between both of your companies is this idea of digitization potentially helping with this growth potential. Teresa, can you just talk about why you think that is the lens that we should be starting at when we think about the African continent and the growth that we could see?
Yeah, absolutely. So first of all, thank you for hosting us. So, one of the things that we've really realized is that companies and organizations that are digitized are more resilient and can innovate more quickly. And so we know that that's better for innovation in any place, including Africa. So, that's, I think, kind of foundational to Microsoft's outlook in the world.
Eyong, is that the same perspective from GE?
Yeah, absolutely. So if you look across sub-Saharan Africa, and anyone that's traveled to a public facility or hospital facility on the continent, you'll know when you open up these rooms and you've got stacks of boxes of folders of people's medical data. In there is so much information that's required to be able to deliver better outcomes. So being able to take that information, digitize it, and then utilize systems, equipment, and other technology to scan, get imaging information, and then connect it with that data that was there from a medical records perspective is absolutely fundamental to be able to deliver the type of healthcare that's needed in the continent. So we all know about the issues around number of doctors, number of nurses being particularly low across the continent. So it's only going to be digitalization of the healthcare infrastructure that's going to enable you to deliver healthcare for the continent. So it's absolutely fundamental and critical.
Well, and we saw, Eyong, I think during COVID, we saw a lot of governments really step up and implement a lot of digital solutions. But what's been interesting for me to look at is that we're not seeing this really translate to better health outcomes. So what is the gap that still exists right here from your perspective in healthcare?
Yeah, I think it's probably a bit too early to see it, right? But if I take intensive care beds, before COVID, we had some countries on the continent that didn't have a single intensive care bed, right? COVID has impacted on that, and now you'll see across pretty much all of sub-Saharan Africa, everybody's got some degree of provision now of intensive care beds. So that will then lead to health outcomes as we go forward. If you look at the rollout of telemedicine or telepharmacology or radiology, again, access has increased, and that will pull through into better outcomes over time. But outcomes is a bit of a lag indicator, right? The early insights are people being scanned? Are the number of scans and the amount of diagnosis that's on the continent increasing? Yes, that is. Are we starting to chip away at early detection of some of these problems? Yes, we are. Is it anywhere near the scale that we need? No, but it's absolutely moving in the right direction. And I think as time moves on and the governments continue to spend the amount that they're spending in healthcare and increasing the amount they're spending in healthcare, you will start seeing better outcomes over time.
Well, yeah, one thing that occurs to me, I mean, part of the issue is the infrastructure, right? If only 40% of Africa is online, that is going to be a part of the problem. And so, from Microsoft's perspective, it's very important to get more of Africa online. And, we've announced today that we're extending our Airband initiative to cover 100 million people in Africa by the end of 2025, including through a partnership with Viasat. So it's so foundational to all of this conversation that just, can people access the internet? That's the only way you can digitize health records to improve outcomes. And we think that actually the infrastructure is the thing that then leads to changed outcomes, kind of across healthcare, across education, across economic opportunity.
Where is Microsoft seeing it work? Because you mentioned $9 billion has been poured into this connectivity. I mean, what is working at this point in time?
So we're currently covering 9 million in Africa. Yeah, billion would be amazing. But, And so, I think I agree that it takes time to actually see outcomes. But, I would say generally across the world where we see digital infrastructure in place, it does increase economic opportunity. And so, and it increases, access to education and all of the various things that the digital infrastructure can support. But agree, it takes some time.
Yeah, look, I can give you a couple of live examples, right? At the moment, if a system goes down, so GE Healthcare, we manufacture large-scale radiology equipment predominantly and offer digital solutions around that. So your X-rays, your MRIs, your CTs and things like that, right? So what we can do right now, when we install systems at a facility, we can offer clinical applications training to the actual operator digitally now through tablets. You can't do that if you don't have internet, right? If you look at from a fixing of systems, we fix probably about 40 to 45% of our equipment remotely now. Again, if they're not connected to the internet, you can't do that. And we have a goal of getting to like 80% of equipment being fixed remotely just by dialing in from somewhere to fix the system versus having an engineer in a car driving to a facility somewhere in the middle of Nairobi and then getting out and trying to fix it. So again, the whole kind of healthcare infrastructure development can only really happen if it's digitized, right? And then going back to my earlier point, that if you've got information, insights on patients that's available, clearly, with all of the appropriate security around that from your facilities, then you can now connect systems that are working to clinical insights to be able to provide better healthcare for patients on the continent. So it's absolutely fundamental on how we move forward.
Ian, I saw that you said somewhere, I'm going to take your quote.
Oh, no.
You said, in the coming years, I expect to see the biggest ever improvement in healthcare infrastructure to date. What gets in the way of that? I mean, this is all, we're talking positive here, but what gets in the way of that progress?
Yeah, so again, I always think, for me, from a GE healthcare perspective, we talk about big healthcare infrastructure, right? So hospitals, primary healthcare centers, oncology centers, that's what we do, right? And that's what's needed on the continent. And the continent has the biggest gap in that type of stuff. Why I'm optimistic about it, what things get in the way, historically, there's always been capital available for these projects. The challenge is having bankable projects to be able to access that financing and those funds. You've also historically not had governments very much focused on this. And I think the pandemic clearly has shone a big light on the need for investment in local infrastructure, because no matter how big you are, you can't typically jump on a plane, you couldn't jump on a plane during COVID. So I think it focused minds on the need to invest in their infrastructure. And then I think the other piece around that is the kind of ecosystem work that we're doing with the likes of Microsoft or AWS, et cetera. We're starting to talk about ecosystems versus I build a CT and I want to put it in a hospital. No, I'm talking about we build a system, we build a CT, we digitally enable it, we work with Microsoft, who has data in the cloud that's able to provide insights and develop the entire clinical pathway. And then we work with small African-based tech startups that are able to provide applications to local facilities that they can actually be able to access data for their patients and for their for their physicians. So I think what got in the way was we probably looked at things in a very siloed way. I think what we're doing now is looking at it as a true ecosystem and sharing information, which we can do now in a much easier way based on the fact that it's digitized.
Do you agree with that, Teresa?
Well, I was thinking about the things that I think are barriers, or maybe what I would say where I think governments can help. And I would say, one, to treat digitalization and access to the internet as infrastructure, really invest. I think that's a really important thing. I think for governments to work with private sector and industry to identify what skills are needed. As we're sort of thinking about the skills of the future, we can kind of see. So we put more people online, we need more cyber skilling. And so we're offering some cyber skilling offerings as well, but we can really work together, I think. Government and private industry can really work together to identify what are the workforce needs, and then as we invest in those workforce needs and that skilling, it opens up entrepreneurial opportunity because people have those skills that then can create more opportunity and it continues to build. And then I think just sort of creating the right enabling regulation ecosystem. And I don't mean that to say we resist regulation, because Microsoft actually doesn't. We sort of welcome it where it's common sense, but to recognize that operating across borders can be challenging unless the regulatory infrastructure kind of enables that. And then even just really specific practical things like permitting processes. So if we're building a data center, we can get really stuck in a permitting process that makes it really hard to continue the investment. So just generally speaking, I think those are the places where they can be barriers or they can be real enablers and unlock the opportunity.
What would be common sense regulation, as you mentioned, that would unlock this opportunity in your opinion?
Yeah, I mean, I think one of the places we talk a lot about is cross-border data flows. You know, if the rules are really strict around what you can send across a border, it makes it harder to take advantage of digitalization and innovation. So I think that's sort of the most immediate answer.
And I think, you know, I saw another report from the IFC and Google, which was talking about Africa's internet economy being one of the most overlooked investment opportunities. I mean, we're talking about this being the right thing to do, right? But as a business, I mean, are you seeing, what are you seeing?
Yeah, I mean, it's an extraordinary opportunity for growth, for business growth. If you have 60% of the population 25 and younger, I mean, that's an enormous opportunity for us for new business. And you know, I think 6 of the 10 fastest growing economies in the world are on the continent. So, I mean, it just doesn't make sense to not go, not be there. I mean, we've been there for about 30 years, but you know, continue the investment because it's so important.
Have you yet, though, seen the returns?
Oh yeah, absolutely.
Yeah,
absolutely. Yeah. I mean, we have 12 offices. We have something like 21,000 partners. I think one of my favorite statistics, you see I'm like catching them in my head, is that for every $1 that Microsoft makes on the continent, our partners make 9. And so that's really aligned with the Microsoft mission, which is really kind of creating that infrastructure so other companies, other organizations can really build on top of it and find, you know, innovative solutions to local problems.
And when we talk about, just before we wrap, regulation, because we were talking about sort of how it works depending on which country you're in, we're in the US where there's a lot of debate over regulation, over a vast amount of things, from AI, from, you know, crypto today, everything. What I wonder can be learned, Eong, maybe you can start, from the way potentially the US is going about governing policies. I mean, the Biden administration came out with its own AI Bill of Rights. I mean, should there be anything taken from what's happening here, or should it be completely?
It's a bit of a tricky question. If I say no, it's great to be unregulated. We can get a lot of stuff done.
Yeah.
You know, skeptics in the room go, "Oh my God, they're going to take my data and do kind of crazy stuff with it." So I think that there's a lot to learn from how some of this regulation's been rolled out in mature markets to make sure that we don't fall into those same traps, right? I think also if you look at the continent, you have a much more trusting population and a much more trusted environment. So if I look at, you know, licensing of medical devices and equipment, the vast majority of sub-Saharan Africa is unregulated, right? So it's how you support and work with governments to develop. And the beauty of what we do is we're able to actually work and support governments to develop policies that absolutely protect the people, the governments, the countries, but are not blockages for the need to be able to leapfrog and catch up and surpass the mature markets and developed markets. We have a unique opportunity to do that. You know, I originally, you know, worked in the UK, and I found it quite frustrating that some of the policies and the regulations stopped us from doing some amazing work. What's so wonderful and beautiful about working across Africa is we can sit down with industry bodies and work with governments to develop policies that enable us to be able to do the work that's super interesting and super needed by the countries. So we're kind of developing with partners, and that's why, again, it's important that you have multiple stakeholders at the table, right? Just so you can kind of offset any kind of force majeure going on. But if you can sit down with our industry partners, and we sit down with our competitors as well, with governments to develop policy that allows us to get things done and get things done quickly, I think it's there's a big opportunity there to move forward.
Yeah, and I would just build on that. I think one of the places where regulation goes awry is where it's the people who are writing it don't understand the underlying technology. So being at the table with technologists or businesses who understand, well, we actually can't do it. We can't architect that way. If you architect that way, you are kind of undermining the value of the technology. And so I think, really close partnership between government and people who understand technology for the work we're doing is really, really important. And the places where it's gotten the most tricky are the places where it's sort of been like, well, you can just turn it off. Well, no, it doesn't work that way. And so I heard this really interesting idea from a university in Spain where they said, we want to create a program where we're educating tech diplomacists. And so that as a profession, I thought that was just brilliant, right? Somebody who can sort of translate between the businesses and the legislators to kind of really come to something that meets the problem in a way that can actually be acted on and doesn't undermine kind of the entire technology.
Wow. Do you have tech diplomacists within Microsoft?
No, I mean, it's actually, the idea is it's a government position. So Denmark has done this. But it would be somebody who works in the government and then works with technology companies and government. I just thought it was a fascinating idea. Yeah.
And then just finally, Young, let's just end on healthcare because we know how critical it is to the continent and to any sort of growth that we're seeing from such a young group. What is it that you're sort of hoping for? What is GE sort of hoping for in the near term to ensure that we're on the right path?
I think keep the focus. Again, I don't like talking about the pandemics, but the upside of it is you now absolutely have governments totally focused on healthcare. You've got capital being lined up for Africa to invest in healthcare infrastructure. You've got, development financing organizations absolutely got to focus on Africa. You've got this health tech explosion happening across, be it, in Nairobi, in Yaba, in Lagos, in South Africa. You've got this, tech startup explosion that organizations like GE and those of Microsoft with their partners program absolutely need to key in and have part of the solution, right? So we're doing a lot of work in connecting with tech startups that have an interest in the areas that we focus on in healthcare, bringing them into the ecosystem and enabling that local knowledge and understanding to be able to help us deliver better healthcare in the countries that we serve on the continent.
Well, and hopefully we can see that translating into.
Yeah, you're a bit impatient, but it
really
will happen.
I think we all are.
It's good. hold us accountable to
I know
that.
we have to. Teresa Hudson, Young Ibai, thank you guys so much. Thank you everyone for listening to us.
Thank you.
Thank you. I'll let you guys go. I don't know if my mic is, oh, there we go. My mic is on for our last panel of the morning. I'd like to welcome our three last panelists. We have Kevin Garrow. He is the managing director and the head of Natural and Renewable Resources Americas at Standard Chartered. We have Natalie Luya, Global Director of Trade and Supply Chain Finance at IFC, and also Teresa Henshaw, the Deputy CEO at UBA America. Please welcome them onto the stage. Wonderful. Okay, so I kind of want to pick up on where we left that last panel. And Natalie, maybe start with you because the IFC recently came out with a report that looked into what the financing is and sort of where our outlook is right now on the continent in terms of financial foreign direct investment. I'm sorry. Can you give us a little bit of brief based on the report that you and your team
Yes, and maybe I can start by introducing the IFC. We are the private arm of the World Bank Group, and a lot of our activities are focused on Africa. We are mainly active in emerging markets, and Africa is a key priority for us. So we look at global trade, that's our area of expertise, and we recently published a report analyzing the deficiencies in trade in Africa, and more generally, in foreign investment in Africa. What we found is that only 25% of trade transactions are being financed, And that's, in the more developed market, that number goes up to 60 or 80%. So there's already a major gap there. The other thing that we found is that 25% of transactions presented to financial institutions are declined. And if you look at which types of transactions are declined, you will see that it's mainly transaction related to SME, exporters, or importers. They are the least served by the banking sector. And then finally, we also found that the costs of doing trade in Africa are 2 to 4% on average, which is way above what you see in other markets, which generally below 1% in the developed world. So there's a lot for us to do, and what IFC does is we have a multiple array of trade products to support transactions in Africa. Our product flagship program is called the Global Trade Financing Program, and what we do is simply put in touch confirming banks in developed markets and issuing banks in emerging markets. And we provide guarantees so that they can establish a relationship, and we facilitate these transactions. That program has deployed $3 billion in Africa last year alone, and we focus 70% of our program is done in the lowest countries, which we call IDA and conflict-affected areas. So through these programs, we're really trying to deepen the availability of trade finance. And maybe I should have started with that, but I think you're all familiar with studies that have shown the importance of trade for the economic development of a country. There's a very strong correlation that justify spending a lot of time on growing trade. I hope that answers your question.
Yeah, that was a good primer. Do you guys want to follow up with that? I mean, Teresa, I know part of what the IFC report was that banks are turning down some offers that are being out there. Has UBA had that experience at all?
Not really. I mean, UBA embraces SMEs and provides finance for trade finance for transactions into Africa and out of Africa. Just to introduce UBA, if you need that introduction, UBA is a Pan-African bank present in 20 African countries with international presence in the US, in the UK, in France, and in UAE, in Dubai. And yes, we promote finance into SMEs, especially in the area of trade.
Kevin?
Yeah. Just I think in terms of what Natalie and what we've spoken about, I think in terms of providing access to the likes of SMEs, we at Standard Chartered, as part of our strategic vision, we have 3 stands. One of those stands is increasing participation in the financial services group sector. And what I think we're doing, particularly partnering with the likes of IFC and other banks, certainly looking at trade finance programs across the continent, pushing especially around SMEs, working a lot with the underserved, and the underserved include women and small-scale farmers. Obviously, we have sizable bricks and mortar on the ground across the continent, but we are also looking at digital investments and digitization. I think that's a big push. Part of that, I think, drives through, I guess, to the earlier panelists around agriculture and other sectors, is assisting them with payments around mobile money, for example. So partnering with our clients and partnering with the mobile companies, enabling them to make payments and receive payments in that form. But I think there is a fair amount to go. I think we're running programs across many countries in Africa with regards to financial literacy, working with governments and NGOs, and also in terms of assisting the underserved and giving them access. But I think it remains, I think, an area of, call it concern for us in terms of the aspects that Natalie raised around certain commercial banks declining trades in Africa. Africa remains an important market for us. We are an emerging market bank across Asia, Africa, and Middle East, and another one of our stands is resetting globalization, and there's a big drive around promoting and building up trade finance and working with our customers to continue to promote trade finance.
What does that look like? I mean, building that back up and restoring that trust.
Well, I think it's a case of the various trade agreements that have been taking place. I think advising around free trade zones, providing education to our clients with regards to the product sets that we provide, making sure they totally understand. And then also, I think it's the underwriting aspect to it in terms of credit appetite. So making sure that our clients have the appropriate sizing in terms of their requirements with regards to working capital. We also assist, obviously, in terms of credit, call it their credit risk management, in terms of letters of credit with regards to certain countries. Given our broad presence and our broad relationships with financial institutions, we are often that bank that is confirming letters of credit or advising letters of credit. So we are commonly known as the banker's bank as well. So.
Sorry, I just want to come in there. One of the limitations for the SMEs would be obviously the high cost. So a lot of them are turned down because of the cost that, is put to the smaller SMEs in Africa. And of course, financial literacy is key, and the ability to make the right decisions. I think that has impacted the SMEs and the trade business.
Right, and I want to talk about, Natalie, maybe you can jump in here, because this whole week is about the U.S. sort of reestablishing its relationship and its trade relationships with Africa. But the reality is, and I think you note this in your report, China and other major players are already heavily invested in here. And so how does this resetting of relationships from your perspective in terms of financing work?
We believe there's a lot to do in Africa. There's room for everybody. The demand vastly exceeds the supply. So what we're hoping to do is encourage banks to work in Africa, to go into more risky countries, and to continue to expand. So we're very pleased when we hear that Standard Chartered has a program that is focused on gender, because we do see that among the SMEs, the ones that have the most difficulty finding financing are the SMEs led by women or owned by women. So that's absolutely an area where we want to focus on. The other thing that we try to do is that, for many years there have been many concerns about AML-CFT, and that has triggered a pullback from the confirming banks to work with the smaller banks, because the cost of the AML-CFT processes was so high that it discouraged relationship with the smaller institution. So we are providing training, IFC jointly with WTO, on trade-based money laundering. Make sure that our banks are able to provide the reassurance to the confirming banks. When I say our banks, I mean banks in emerging markets or in Africa, have the capacity to demonstrate to confirming banks that they have good AML-CFT processes. And another thing that we do also is organize workshops where we invite government institution, professional organization, but also the SMEs themselves to train them about the diversity of trade products, so that they can understand better how to work with their bankers and try to have access to more sources of financing.
Yeah.
I think we also see, it differs across various sectors. I think if you look at our US oil and gas client base, I think the IOCs have been tremendously responsive to Africa over many decades. I think we've been working with them for many decades on the continent. We also recognize that they have significant partnerships with many of the state-owned oil companies, and we partner with them in that regard. If you move across sectors to, for example, the agricultural sector, I think you'll find that the US, our US agricultural client base has been fairly risk-off when it comes to Africa. When we look at our Asian client base in agriculture, they seem to be a lot more progressive and a lot more risk-averse to the continent. So it's about, I think, sharing best practices with them and ensuring that we, because a lot of their information could potentially be perception-led, and it's breaking down certain of those perceptions, particularly around things like corporate governance or governance in general, corruption, ease of doing business, in that regard. So, that's incumbent upon us as bankers to make sure that we do that, to build that out.
And Teresa, I saw you nodding there as well.
I agree completely with Kevin.
Yeah, and I think. Oh, go ahead.
Go ahead.
Oh, okay. I wanted to follow up just because we were talking about risky, a lot more appetite for risk. But I think the reality is when we talk about the various countries across the continent, there is a lot of concern about debt, right? And the exposure there. I mean, does UBA, where does that factor into the conversation when talking about risk exposure?
Oh, so Africa recently, as you know, especially with the Fed obviously increasing the interest rates, foreign exchange in Africa has become, a sensitive topic. And so debts in foreign currency obviously is an issue with the banks now because of the rising cost, the cost of borrowing for the sovereign itself, of course, and of course for the businesses. So yes, so the high cost of borrowing in the dollar is definitely a factor that impacts the businesses directly, and hence the debt levels.
Well, how's it going to, yeah.
I mean, there have been a number of liquidity challenges. I think obviously the dollar strength has been an issue. I think across West Africa we've seen some challenges. I think, but what we are doing and seeing is that we're working with, again, a number of our clients and governments looking at, fairly innovative solutions around that with regards to, for example, where certain countries might be rich in a certain commodity and they would require, for example, energy or something else. There's a potential for either barter trades or something more innovative to assist with regards to the liquidity situation. I think, in general, I think, the commercial banks, we have underwriting standards, I think, which we follow through, and these are fairly well documented. But I think what we want to see is, and what we have been pushing for, is more around our relationships. These are long-term relationships. These relationships with our clients on the continent should see through, various cycles. They should see through the political cycles. They should see through the economic cycles. I think that's I guess the testament of the organization.
Well, that's a best case scenario, right?
Yes.
Right.
It doesn't always work out like that, I know, but
No. Is it working like that anywhere at this point in time?
It is. I think, listen, again, the continent is blessed with some of the largest reserves of minerals and natural resources, right? I think one of the global trends naturally is the journey towards net zero and the journey towards energy transition. However, there just aren't enough minerals currently, I think, to meet a number of these mandates, particularly, for example, electric vehicles and battery materials. So what we have to do is, and what we will be doing with our clients, again, on the continent, is assisting, particularly around mining and making sure there's a here for good methodology, a partnership approach, again, with governments and with our largest clients.
Natalie, how do African countries make themselves more attractive and for more capital, more investment?
Okay, so first I'd like to highlight that when we talk about risks, we have to look at trade differently. Trade is actually pretty low risk. We have been financing trade for 18 years. We have 400 plus partner banks across the world. And over this whole period, we've done 84 billion of trade transactions in the form of financing. We haven't had any losses, right? This is quite a track record that I want to highlight to all of you, that trade in Africa is an interesting business line that is worth developing more, because you have goods going from one place to the other. It's very controllable, and therefore the risk is much lower than if you talk about long-term debt or other products that the banks can offer. So, we say, work with short-term finance for long-term impact. It's extremely powerful instrument with lower risk. So one of the things that we are focused on is sustainable trade. The sectors that we are trying to support more are, work around food security. We're trying to support food and the agri sector. We're also looking at climate smart investments that we try to finance as a priority. And more recently, we have tried to take advantage of the Africa Free Trade Agreement, which is being implemented, and trying to support intra-Africa trade. Because still today, a large portion of the trades are from Africa to another continent or this way around. So we're trying to support intra-Africa trade. So there's, again, a lot of potential for growth, a lot of potential to attract more banks into that segment and to see growth in that business segment.
But we're seeing a lot of the investment going to the same countries for the most part. How does that broaden out, Natalie, from your perspective?
No, you are right. We have dominant countries on the continent who drive the growth, Nigeria, Kenya, and South Africa, clearly. But our programs allow us to work in much smaller countries. And that's our role at IFC. I mean, we are not needed in South Africa most of the time. The business is running very well there. We are needed in Nigeria when there's because political uncertainty brings some more need for our interventions. But where we are really needed are in the smaller countries. It's in Burkina Faso, it's in Burundi, it's in Angola. So these are the countries that all of our programs are focused on.
And Teresa, I'd love for you to jump in as well, especially because UBA is one of the only sub-Saharan African bank in America. I mean, I wonder from your perspective, how do we broaden that out and attract more investment onto the continent?
So UBA, present in 20 African countries, invest in the the SMEs, as I said earlier. We fund them regardless of the cost of dollars to us. But to attract foreign investment, obviously we just need more structure as a nation, as a continent. We need more structure, we need more transparency. We need to get rid of corruption and, in different ways, but, to work at high levels as well, for the continent to be transparent. To foreign investors who, and there are very many foreign investors in the continent, but we need sustainability and we need it scalable, and I think the continent in itself, has some work to do for that.
Detail that a little bit more for us, because there are a lot of things that you just noted there. And so where do you start? How would you advise governments?
I would speak about collaboration, first of all, between public and private sectors in the continent for a transparent outlook, and so that investors are confident that their investments are sustainable. And also, I think literacy, financial literacy, I mentioned earlier, would really help, so that people are making the right choices within the continent as investments come in. Yeah.
Kevin?
Yeah, I think we heard the Honourable Minister speak about partnerships earlier. I think we work very closely with the IFC, as I mentioned. I think we are continuing to build out the, I think our accessibility with regards to the sizable funds that we bank. So working more closely with the private equity funds, a lot of the strategic investor groups, working with a number of the NGOs and some of the donor organizations. And then I think finally the piece that we haven't spoken about is around ECAs, export credit agencies, which we work a lot with on the continent, especially in sizable infrastructure financings, which provides, again, guarantees and support for us as we either lead and finance these mega projects. So it's a partnership, and I think we have to do more of these.
Natalie, do you agree with that?
Yeah, we are working hand in hand. Our focus on developing the internal capacity of the banks in Africa. So we want them to grow, we want them to offer more products locally to the SMEs, because it's easier for them to know their markets and know with which clients to work with. So we strengthen their capacity as much as we can by providing training and support, because we believe that a lot of the activities in Africa will be financed through these networks of banks, UBA has 20 subsidiaries. There are other groups that are also well implemented in Africa. And so we think that if they can offer today letter of credit, but tomorrow maybe we can introduce more supply chain finance, which is one of our goals now, is to look at supply chain financing for suppliers in Africa. It's not a product that is well developed in Africa, and that's the kind of thing that we would like to see grow so that the continent can benefit and grow within Africa with the strength of the financial institutions in Africa.
When do we start seeing that having an actual impact then?
Well, we feel that we can see the impact. I mean, we see already basic trades is growing. So you can say that some of it is related to the crisis that we've gone through. But the numbers and the demand is growing very rapidly. There's clearly an impact. And then at the same time that we need to continue supporting these activities, we also need to develop new products. One of the conclusions of the report is that we need to innovate also in the financial sector to serve better the SMEs, which are a motor of growth for the continent.
Right. And we're seeing that a little bit. Teresa, did you want to add anything?
No, I agree with Natalie.
Yeah, we are seeing that a lot, but the SMEs are going to need. Is UBA doing anything specific just to, I mean, you mentioned financial literacy, but are there other innovative tools that UBA is trying to tap into?
Oh yes, of course we work with development organizations to get funding for the African businesses, for different sectors and different programs, so UBA taps into that, being in the US, and perpetuates it into Africa, into our presence countries.
Right, and taking a different approach, though.
Absolutely.
I'm assuming.
Yes.
Right, and just finally, I'd love for everyone to leave with something. Kevin, would you be able to share something for us, just in terms of we're on the sidelines of the summit and it's all about trade and investment.
I think we've always heard about Africa's time is now, but I think Africa's time is really now. I think I think the having worked through the pandemic, as tragic as it was, I think it was an opportunity to reset things, especially reset supply chains, reset partnerships, and I think there remains and will continue to be tremendous opportunities. We have to change perceptions. I think we, especially working with our US client base, as you've said, I think somewhat left behind in terms of investment on the continent, and will certainly, I think, start looking and pushing on those investments going forward.
Natalie?
Yeah, we're also very optimistic for Africa. We just launched an Africa Trade Recovery Initiative focused on recovering after the crisis for $1 billion US, and covering all the topics that we discussed today. Yeah. So we're looking forward to doing more in Africa and very confident. There was a summit in Lomé recently, the African Financial Institution Summit, and it was really well attended, and there was a lot of positive energy and lots of things happening on the continent that makes us very positive about the outlook.
Teresa, you get the final word.
Yeah, I think from UBA's perspective, it's access to finance, for SMEs, financial literacy, making the process less complicated, the loan process is less complicated, and of course, being a conduit of investment to the different countries where we're present, to Africa, sub-Saharan Africa, basically.
Wonderful. Well, thank you so much. Thank you, everyone, for your time. Teresa, Natalie, and Kevin, thank you. And that is where we wrap it up.
Thank you.
Thanks for listening.
I'll let you guys do.
Thank you. Thank you so much, Natalie. Thank you, Kevin. And I'm just going to conclude us for this morning, because I know all of you have been sitting through this. Thank you so much for joining us for this Sustainable Africa Investment, Innovation, and the Future of Global Trade. We hope you enjoyed it. We hope you take something away and to share with your networks. And just a final thank you to our sponsor, the Namibia Investment Promotion and Development Board, for making this briefing possible. Hope you guys had a great morning, and thank you again so much for joining us.